Good morning, everyone. Morning. How's everyone doing this Saturday morning? Am I audible? Am I coming across? Am I audible to everyone? Yeah? No? Check 1, 2, 3. Perfect. All right, just a couple of minutes more, and we'll get going. Okay, for this Saturday morning. Okay, I hope everyone's having a wonderful Saturday morning and looking forward to a session on order flow today. Right? Just give me a few more seconds and we'll get the show on the road. So I hope everyone can see my chart. An order flow chart is on screen. If someone can confirm. Perfect. Happy to share all that I know. Okay, can someone confirm if they can see my chart as well? There's an order flow chart on screen. Yeah, so I hope that yes is for everyone. Great, fine. Right, so let's get these technicalities out of the way and I'll continue speaking. I'll just tell you when I'm about to start. So I just want all audio issues also to be sorted. If a few of you can give me a yes that they can also hear me well, I would not like anyone to lose anything about what I have got to say. So let's sort out those audio issues as well. Perfect. Right. Okay, so let's get started. We'll get this show on the road today. Today's session is on order flow trading, and I've been an order flow practitioner. In fact, my life as an order flow person has started with me being a trader, and today, I'm a promoter of an order flow charts also, which is actually started to assist me with my order flow trading activity. I'll come to that second part of why I did that and why I needed to do it, etc., later on, in this session. But today's session is for you. It's for everyone, to understand what the order flow is. And this word has been instrumental in my life for the past 15 years. I've been using this word intermittently in almost every single conversation I've had with fellow traders like you, with friends, with family. There's never a conversation which goes by with me in it and the word order flow not in it. It's become such an integral part of my life, and I'm happy to talk about it. Very passionate about trading, about the activity of trading. And that passion comes because I've seen my life turn 360 degrees as a trader because of the influence market profile, and I call order flow an extension of the market profile. It's a market profile level 2, and market profile and order flow, the effect it has had on me and my life as a trader is what has made me stand in front of you today and talk to you about what this concept is all about. So I'll get this show on the road, and today's session I basically divided it into about 4 or 5 different parts, and it's not just going to be me talking. I have made space, okay, for your questions, okay, to come in as well. And we'll keep it, okay, at a ground level today. We are not going to go too much, okay, into advanced order flow concepts, but I basically want to talk to you, okay, about what the order flow is, about my journey in order flow, and I hope, okay, you all can relate, okay, to that journey as well, because I started, okay, as somebody who was very, very new, okay, to this concept of order flow. I remember, okay, my early start in order flow was about getting up at 3 a.m. in the morning, guys. And believe you me, I used to do that, okay, for not just 1 or 2 nights, 3 a.m. in the morning, getting up to listen to someone speaking on order flow. I used to trade the US markets at that point of time, and they used to have these webinars post their close, which was around 1:30, 2:30 in the morning. So my alarm, okay, used to go up at 3 a.m. whenever, okay, they had an audio webinar going, and I learned, okay, from there. And down the road, it made a difference, okay, to me in my trading. I could see actual, visible, tangible results about how my entries had got better, how my exits, okay, had become more profound, more rounded, and that satisfaction of those trades made me go deeper into the subject, understand, okay, all the little aspects of the order flow chart. And there was a lot of work involved, okay, and it's not just, okay, about getting up at 3 a.m. in the morning and listening to webinars. I used to be on those charts post our close and understand, okay, what the market did. I still do a lot of that even today. Go back, okay, into the charts, understand, okay, what the order flow was doing, which is why, okay, I can talk to you on Twitter about what the order flow thing is all about, and what the message of the order flow is. And it's been a journey, and it's a journey. It's not a destination. It's still ongoing for me. And I'm always happy, okay, to talk to a fellow trader about it. And it's your journey as well. You have to do the work to see, okay, whether, okay, it can work for you. And if you do the work, and if you do the work diligently, following the right set of rules and right set of programs, then this is going to be a fantastic. You're going to take the stress out of trading, and you're going to be on a path, okay, where you will be in control at all times. This is, okay, what I can assure you as you go much deeper into the world of order flow trading. Right now, the first question, okay, which a lot of traders, okay, when they first see a chart, okay, like this on screen, okay, and I'll explain to you in a bit about what this chart is all about. But the first question, okay, which comes is, bhaiya, ye order flow hai kya? What is order flow, right? So I want to take a minute with you and talk to you about, take you back, okay, about a few seconds, okay, to what you did yesterday if you were trading in the markets, or if or any time, okay, during this week. What actually happens after you punch your order to your broker on your terminal? What really happens after that? Okay, and if you can take a moment to understand what really happens, okay, after you press that F1 button for your buy, or your F2 button for a sell, or whichever other way, okay, you do it, plus, minus. I know, okay, there are a lot of different methods of doing it today, but after you punch that order, whether it's a buy or a sell, buy option, buy stock, buy futures, whatever you do, or write options, what happens after that? Okay, your order goes to your broker, right? And you could be trading with any number of broker. Your broker sends it to the exchange, right? And yeah, you all know, okay, the exchange is at BKC today, Mumbai. They have a massive building over there. And at that exchange, all those servers mix and match all the orders, okay, which are coming in over there from across the country, right? So you may be in Delhi, okay, sending your order. Somebody else, okay, may be sending that order from another place in Mumbai, in Pune, or for Ludhiana, Calcutta, Nagpur, wherever. Okay, all those orders, okay, come, okay, to that central server. What really happens over there? Okay, that is where the order flow thing comes in. So there is a mix and match, okay, happening over there. Okay, and when that mix and match happens, okay, a buyer meets a seller, you can get a trade happening. Now this, as in essence, is what the order flow trading is all about. The order flow trading is about taking all those trades, putting them on a chart, and trying to understand what really happened, right? So if you're looking at all these numbers, just ignore, okay, the instrument on the chart. But if you're looking at all these numbers on your screen, each of them represents somebody who sent an order to the exchange. right? So this is measured in number of lots. So there are about 342 individuals over here who traded one lot each, or there are about 34 people who traded about 10 lots each, or this could be one gentleman with 342. It's not important. What is important is that there is a 342 number over here, and this 342 number is a collective group of people who decided to send orders to the exchange at this particular time, 3:06 p.m. right? So this on the left is where that sell side of the trade was, and they started sending it to the exchange from a price of 237, and they kept sending it for those 3 minutes, right, till the price of 225, high and low. And on the other side, there were other people who wanted to buy into the market. So this 186, this 177, 103, etc. are the other sets of people who had a different view about what was going to happen at this particular time, 3:06 p.m. Okay, and they sent buy side orders into the exchange, right? So in net, you can say there were 3,202. This is the volume of this particular bar, and this is a 3-minute bar. In net, there were 3,202 orders or number of lots which were received in this exchange for this particular instrument, which on my screen right now is about 22,100 CE. And this is actually a very small number right now for those 3 minutes. Okay, but these were a number of sell side orders which were received for the 3 minutes, and these were the number of buy side orders, okay, which were received for those 3 minutes. Right now, this is information which has come to us, and this is actually what an order flow chart is, right? And you get to classify them as sellers or buyers, and then after you classified them, the universe changes. The universe changes because you have to apply a set of rules to it. You have to apply a set of systems to it. Okay, and then you have to decipher the data which is coming in. So I'll walk you through what all that is all about. But principally, I wanted to explain to you that order flow is nothing but what really happens after you sent an order to the exchange, and not just you. Okay, there are about lots and lots of people who are trading alongside you, and all those traders who send their orders to the exchange, what really happens at the exchange level, a duplication of that, and I'll repeat that word, a duplication of what happens at the exchange is received on your order flow chart, right? So I hope I am able to communicate this aspect to you, and this would lead and lay a foundation to what we are going to be discussing when it comes to an order flow chart, right? So a question time over here. Any questions before I progress further on what essentially is an order flow chart? Any questions so far about what is an order flow chart? And I'll walk you through why it is important, what can you do with this information, how you read this information, etc., etc. If you have any questions, please feel free to stop me and ask those questions right here, right now. Okay, I'll take them one by one as we come across, and we will talk to you about this. So the question is, if your questions are in line with what we are being discussing over here, I'll put them up on screen as well. So it's a very good question. Do we need to learn the market profile before we need to start order flow? Right. Now, let me explain to you in this way. What we are talking about over here in order flow is an equation between buyers and sellers. Right. Now, I want us to shift a little bit from what we are told generally about markets. So whichever program you may be part of outside, lot of importance is placed on this particular word, and which is PRICE, right? So we've been all told that bhav bhagwan she, price is everything, and everybody who focus on prices is gonna be a winner. I agree with all of that. Okay, but in the world of derivatives trading, okay, in which you and I are a part of today, and the faster paced options market, there's not just one Bhagwan, right? There are three Bhagwans, three gods. Okay, price Bhagwan She is right, but let me add to that: volume Bhagwan She and time Bhagwan She. So you have to remember this. The markets have changed in the 70s and the 80s and the 90s. Bhagwan She, yes, 100% true. And if you speak to somebody who was born in that generation and trading in that generation, they will not agree with you. They will say price is everything. But what we've done is we've come from there to a faster electronic mode of trading, which is getting faster and faster every single day. When I started trading, we had one settlement. Okay, Nifty, Bank Nifty was not even a factor at that point of time, and we used to wait 25 days for that weekly, for that monthly settlement. Okay, and our trading was about waiting out the first 8 days of the series. So the expiry was still on the 25th, 26th, the last Thursday of the month. But the first 6 or 7 days was for us in a new series to just wait and see what the rest of the market is doing. And we started entering our trades from the 7th, 8th, 9th session, and we used to be writing till the end of the month, because if you waited for those first 5-6 days, you used to get a big chunk of the profit which was eventually happening. That was the theta decay concept, right? So we used to trade like that, and those were the way in which we were introduced to the world of trading. A monthly settlement, monthly series, getting onto that last Thursday of the month was the big thing. And the trades used to start giving us profits at the end of that session 18, session 19, session 20, and the rest of it was about how to hold on to that profit, because theta decay was a big thing, which is why everybody became a writer. And later on, as we progressed from that age to where we are today, now the big thing is everybody wants to be a writer, everybody wants to be a big writer, but we have gone from a monthly settlement cycle to a weekly settlement cycle, and the US today works on a daily settlement cycle. So in one word, the markets have changed, right? And the markets have become faster, and what used to be working 20-25 years back is not necessarily working today. You have to keep pace with the moving times, and a lot of traders are not doing that. Okay, so I'm not saying some methods which are traditionally used outside for derivatives trading are obsolete. I'm not saying that, but I'm saying definitely that those methods which were previously used need to be supplemented with additional information, need to be supplemented with additional data. And if you can do that, you will remove a lot of those other things which are involved in the world of trading. So what we do in order flow trading is we take the focus a little bit away from price, and we add an impact of volume to it, and we see what is the kind of volume which is moving price, whether that volume is going to give us a breakout, or whether that volume is going to give us a breakdown. And if that volume is giving us a breakout, is it good enough to do a breakout, right? And if it's giving a breakdown, is the volume good enough to give a breakdown, right? I won't go much further, but I just want you to, some of you are following with me on Twitter, and last Monday when we were opening up the Nifty futures, we were around 22,300 odd in the Nifty, and the entire FinTwit was saying breakout A, breakout A, breakout A, right? But if you go back and go and read what my tweets were, the order flow charts were clearly saying breakout nahi ho sakta. Why? Because the volume was not there. And I told you, the up move is over. Don't chase the breakout. Wait for a pullback, right? Until Wednesday, the market made that high around 22,300, but we dropped about 300, 350 points. And all those people who said breakout A, breakout A, breakout A, what did they end up saying? They said failed breakout A. But the order flow trader knew when it was breaking out, that it was not going to be a breakout. The volume conveyed that price is not going to be taking, price is not going to be in a position to take off. The volume was showing that there was supply coming in at those higher levels, and when supply comes in at the higher levels, there is no demand to push price into a breakout zone, right? So we came down, and when we came down, and I'll share that example with you a little while later in the program, we came down to that zone where there was no supply. And there they were adding demand. There they were adding demand in the market. And I think some of you who followed me live on Twitter, I told you on Thursday afternoon it was that all the supply had got closed and the market would go higher. And Friday morning it was opening up at new weekly highs. So this is the perspective which volume gives you. And when you're looking at market profile, the market profile always told you that there are buyers and sellers in the market. But the order flow, it goes one step deeper. It tells you what the buyers and sellers are actually doing. So if you always followed a market profile chart, you know that Jim Dalton also always says, what is the buyer doing? Is he doing a good job doing what he is doing? Is he doing a good job doing what he is doing? Right? And that was always the fundamental question of the market profile. Who is doing a good job? Is the buyer doing a good job when he's chasing a breakout, or is the seller up over there and preventing that breakout from happening? And if you can find an answer to this question, if the market is breaking out, is it doing a good job? Is the seller there? Is the buyer still adding a lot more demand at that breakout zone? If you can find an answer to this question, 70% of your problems in trading are solved, because your breakouts will be successful. Your breakdowns you will know you will get that conviction to trade the market on the breakdown also, right? So start with an understanding of market profile and work onto the order flow, and you should get all your issues in trading sorted. So another question which comes when it comes to order flow, are these orders which are executed? Now I want to be very, very clear over here. We are trading with executed quantities over here. So when you talk about an order flow chart, you're talking about traded quantities, right? These are orders which are traded, which are executed, and we want to be working with that because we want to work with traders who have real skin in the game, real money in the game, who have got commitment of money to that particular opinion or trade that they have taken in the market, right? We are not talking about the order book, which is an order still got to be confirmed at the exchange. Things change when money is put to a position, right? So if say a person puts in about 100 lots in the Nifty at the level of say 22,300 in the Nifty, and he's got about 100 lots, and he's got that commitment of 100 lots, his margin is blocked, and he has to report a daily MTM to the exchange, right? If for some reason he was a buyer, and if for some reason the market drops about 200 points, right? Now, is this trader in panic, right? As opposed to somebody in the order book, is this trader under real pressure because the market is 200 points down and lower from his position? And because he's under pressure, yes, he is under pressure, right? And because he's under pressure, he may decide to liquidate, or he may decide to add more funds. If he's got those funds, he may decide to add to that position again, and that changes the dynamic again in the market. That changes that demand supply in the market again, right? So I'll talk to you about more about what really happens in the order flow in a bit, but please understand this is all about traded quantities. Right. So some basic questions about order flow have been covered. I'll keep moving and I'll keep the floor open to your questions as well. And I'm reading you. So please keep those questions coming in. Some of your questions will be answered as we flow along. But I basically want to talk to you about what the order flow chart does. Right. So we've already established over here that the order flow chart is about the orders which are coming to the exchange, and orders generated by you, me, the institutions, the professional desk, by about virtually everybody who is out over there. All the orders which are coming into the exchange are replicated on your order flow chart, and now you have a bunch of numbers which are staring at you on your screen. Now the big question is, what do you do with these numbers, and how do you read these numbers? Right? And it's a question I had when I looked at an order flow chart. The amount of information is just too much, and you really will get lost looking at all these numbers, and it's just physically not possible to read each and every single number on a chart and understand what the market is doing. Okay, so take down some of these things which I'm going to tell you. Rule number one of an order flow chart. Rule number one of an order flow chart. In all the numbers which are on your screen, focus on the people with the big numbers. Focus on the big numbers. So that's the number one takeaway I want you to have between all of these numbers. And I'll give you some more rules to read of an order flow chart. But the number one takeaway for here, as you're a beginner into order flow chart, is to know that you will read the bigger numbers of an order flow chart. Now you'll ask me, why shy? Okay, why do I need to read the bigger numbers? So on all these numbers, if you have a screen like this, your first focus is going to be where are the big guys? Okay, and whether they are together or not. So like I told you, all the sellers are on the left and all the buyers are on the right. Now you're panning quickly across the chart and looking at where the big guys are. So I'm not looking at that 7, I'm not looking at that 83, I'm not looking at this 26. My eyes are zooming in to see where the big numbers are. Now why do I need to do that? Okay, so it's a saying in the market, and it's not a very good saying. Might is right. It's the law of the jungle. Who is the strongest in the jungle? The rabbit or the lion? Right? The answer is self-evident, right? So might is right. The bigger player has a bigger hold on the market, right? So when you're talking about a market, so the question is, does the order flow work on individual stocks? It works on the entire market. It works on options, futures, commodities, and you name it. Crude, gold, natural gas is just a depiction of what happens on the exchange. If the exchange receives an order, the order flow chart is going to show that order, right? So coming back to what I was saying, might is right, right? And the guy with the bigger stick has got a bigger weightage on the market. Now why do I say that? Okay, so suppose we'll take this example only, and this particular numbers are here. Let's focus on these 3 or 4 bars, and this is the 22-100 call. Okay, now on this, if a guy has got about 937 lots right at the top, 238, this 937 lots is got bigger weightage on the movement of price than somebody with about 5 lots, right? So this 937 is definitely gonna push the market lower, right? And this 937 by itself will not be enough to push price lower. If it is getting a lot more supply along with it, it's gonna keep pushing prices lower. So what we are seeing over here is we are quickly panning this chart to see whether there is another 937 guy anywhere else, and whether this 937 guy is going to keep adding. And if I see that he's getting some more supply added over here, I'll continuously be with this 937 who drove this price down from 238 to 207 in the matter of 4 minutes, right? This is your way of looking at this market. And this is just one method that you go with a bigger player in the market, and that's one of the easiest tells you can always get in an order flow chart. Look for the guy with the big number, and if you're with the big guy, there is a lot of chance that you can get most of your trades right, as opposed to a guy with about 15 lots or 16 lots, right? What really happens is, because this 937 lot seller came to the exchange at 238, there wasn't enough demand added at that level to keep this price from going up. So it went from 211 to 215. It had reached 238 when this 937 seller came, and the market in this 22-100 CE was looking to see if this 937 was getting matched by another 1000 seller, and there was no supply over there. There was no supply over there to overcome what this 937 wanted to do. This 937 lot is a seller, and the job of the seller is to push price down. Are you with me? The job of the seller is to push price down, and the job of the demand is to push price up. So if you are a put buyer, what do you want to do? You want price to go down. If you're a call buyer, what do you want from the market? You want price to go up, right? Now the market is thinking and looking at this particular set, which is happening here at 321. And it's saying there is a 937 lot seller over here, and there is no matching demand which can overcome this 937. There is no matching demand which can overcome this 937. So it sees on the right side immediately, okay, that those orders which went to the exchange at this particular time, 321, there was 113, 62, 224, but none of them were bigger than this 937 lot seller. And that is why price had to come down. So price follows what volume does first. This guy came in first and he's actually a traded quantity in the exchange. And then, okay, price, okay, went down. Now, this is just a micro picture of what really happens. But within the order flow, you'll get a lot of examples, okay, of this, okay, happening in real time across. So if I go back, okay, with you to what was happening in, say, the Nifty, okay, and I just talked to you, okay, about what this is. So I'll take a broader view. I'll go, okay, with a 30-minute chart. And I want to see a broader view. Because it's a 30-minute chart, I'll change my PPR settings to 4. I'll talk to you, okay, in a bit, okay, about what that is. But instead of just going back to yesterday's tape, let's go back a few days to this example I just spoke to you about, right? So we are on the 20th of Feb. We are on the 20th of Feb, right? And this is the tape on the 20th of Feb. The market is gone down to a level of about 22,220, right? And at this level of 22,220, when everybody's saying breakout, 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 what are we seeing? We are seeing this 1210 lot seller over here. Can everybody see this 1210 here? Can everybody see this 1210 here? Can everybody, okay, see this 800 here? Can everybody see this 262 over here? Right? And this is happening at this price of 22220. And there is what we call, okay, in order flow, an initiative selling signal over here, right? So can we say, looking at this particular thing, okay, which happened between 11:45 and 12:45, and this is a 30-minute window, and this is the 20th of February, and this 1 hour, okay, you can say, okay, that there is an evidence of supply coming into the market, that supply is greater than the demand. Yes, no? Are you guys with me still? Right? So you can say that there is an evidence of supply coming into the market at this particular point in time. Supply is greater than demand. And what happens, okay, when supply is greater than demand, price has no option but to go lower to either find new demand or to get initiative new supply, right? Supply and demand is just about everything in the markets. If demand is higher than supply, price has no option but to go up. And if supply is greater than demand, price has no option but to go down, right? And this is the truth. And this has got nothing, okay, to do, okay, with our understanding of how price works. But actually, the truth of the market says price and volume work together, right? It does not lead or it does not lag or anything of that sort. But without volume, price cannot move. And without price, there's no example, okay, of what volume can do. But it's also true that if you do not input, okay, your volume quantity, your order is not going to be received at the exchange. The exchange is not going to receive it. Try tomorrow. Okay, if you're going, okay, back into markets on Monday, input an order for Nifty or instrument or your stock and send it with 0 lots. It will not go to the exchange because the volume is the driver, right? But without volume, your engine is off. So this is, okay, where it was. And if you pan back, they kept adding supply as the market rose. So you'll see a lot more of the red, okay, coming in on every single probe, and it went up to 22,270 next day, and they kept adding all the supply. There was an initiative selling which came in, right? And if you look back, as the market dipped to that level of 21,944, now, okay, look down at these lows of last week. Now look down at these lows of last week. So you see this 756 and all this green, okay, over here, and all this cot, okay, which has gone green. Is this more demand or is it more supply at the lows? Right? There is definite evidence of more demand over here, right? So there is this supply, okay, which was there initially at 22,300 is no longer in the tape. Now the market has got no option but to go up, but to keep rising. right? And it does keep rising. It gives you, okay, all this demand. This was actually, okay, on Thursday. It gives you all this heavy demand. And if you look back, okay, later at the commitment of traders reading, it shows you, okay, that there is a lot more demand added, and price has no option but to keep rising, because now demand is outstripping supply and price, okay, continues going upwards, right? So this is, okay, how it is. There is a lot of numbers, but beyond that, you have to make sense of what these numbers are. Now I'm going to be talking to you about some more key concepts. It's not just reading of numbers. There is a certain rule over here. There is a certain regulation to be followed, and there has to be a process of understanding what these numbers are all about. Now all that requires work. But what I'm trying to communicate, okay, to you is that the entire market, when you shift your attention from understanding it as a price-based mechanism to a mechanism of demand and supply, and you understand the chart to see whether there is more demand, or you understand the chart to see, okay, whether there is more supply, you will get a better insight on what the market can do next. So that essentially is what the order flow is. So I'm gonna talk to you about a bit more about how you can utilize these in real-time market hours. But before that, okay, I'll pause, okay, to take some more questions. So the question is the data received real time, or what is the tag? The data is real time, okay, with a little bit of microsecond processing, which we need to do so that, okay, you get to see the chart as it is, right? So all these charts are curated. They have to be put in a certain pattern. And I'm not going to say to you at all, okay, that there is zero lag over here. World over, all order flow charts, because, okay, they have to be constructed, and because, okay, they have to be put up in a certain way, will have, okay, an element of a lag from the exchange, and that is a known truth of the order flow. But it will not affect your trading in any which way, because, okay, you have to, okay, construct, okay, that order information which comes from the exchange and duplicate it on a chart, and that requires, okay, a little bit of time. Okay, so any more questions? Right, so there were 937 lots. No, there was no 937 buyers over there. Did we see 937 buyers on the right hand side? So try to understand, okay, this. I see this confusion a lot about where the supply is and where the demand is. Okay, I'll make it, okay, very, very simple to you. A lot of programs out over there, okay, complicate, okay, what is essentially a simple truth of the markets. Now, I know, okay, when I'm talking about order flow, we are talking about a means to establish demand and supply in the market. Now, not all order flow programs across the world are going to be the same. Okay, and Mark asks me, okay, one day, okay, when you meet me in person, I'll be happy, okay, to discuss, okay, my order flow journey with you. But my journey has been, okay, through a number of programs and a lot of software, and I've seen no two order flow softwares to be alike. Okay, and this is about liquid instruments. This is across exchanges, across continents, across countries. No two order flow programs, okay, would be the same, and there is a reasoning for it. Okay, and I can give you a small example, okay, if you want. If you're in the market to buy, let's say, a car, okay, whatever is your budget, when you're talking about buying a car, you can get a car for 2.5 lakh rupees, and you can get it for about 2 crores, 5 crores, 10 crores. And if you look at that paradigm, okay, between 2 lakhs and, say, okay, about 1 crore, actually, just to refine our example, you'll find an X3, a BMW X3 at the top end, 85-90 lakh rupees, Porsche Macan, 90-95 lakh rupees, and on the lower end, okay, you'll find a Maruti, a van, Omni, somebody from Hyundai there. They are all called cars, right? It's the same body, it's the same 4 sets of tires, it's the steering wheel, And if you want to get from Mumbai to Pune, all cars are going to get you from Mumbai to Pune, or you want to go from Delhi to Pune by the Agra highway or wherever, you will still reach. They are all called CARS cars. But what is different? The difference is the engine below the bonnet. You definitely cannot compare an X3 with a Maruti 800. And a lot of people, when they come to Orderflow webinars, and I have been there, they try to compare. And they compare, and they just cannot get their minds around to the fact that a BMW is different from a Maruti. And you cannot compare, you cannot call them an Orderflow chart, even though it is still called a car. You'll still call a Maruti a car, and you'll still call a BMW a car, but you have to have an understanding about the engine. And that's why you pay the extra amount to get clarity about what it is, right? So we are not comparing ourselves to anybody, and I am also saying that what we have over here is different from what is outside over there. But we worked on our charts. We understood what really works on chart, and these charts which you have on screen for the VTrender program are built ground up. This is not some code which we've taken from an X body and put it out over there and said now this is an Orderflow chart, and now you go with it. We have worked on each and every single element of the car. You can say in one word, the engine has been built from the ground up to understand what is the challenge of trading at the NSE, and we are an NSE specific trade location, right? We cater to the exchange because we know this market and we know what really works in our market. So number one, don't compare us to anybody else. You'll never find the same set of numbers. We built everything ground up because we want to know that demand and supply, and we understand that demand and supply is the one driver of the markets today, right? And number two, I want to tell you that in all Orderflow of VTrender, you will find the supply on the left hand side and the demand on the right hand side. And let's not make this complicated. That is the way it should be, and it is all supply on the left hand side and all demand on the right hand side, and it's not complicated at all. You must have heard that this can happen and that can happen. We bypassed all of it and we cut it out, and we streamlined a product for you which has got all supply on the left hand side and all demand on the right hand side. Now I want you to understand why. I want you to understand why we did that. Yeah. So here's the thing. Suppose price is trading at 22,292. Suppose price is trading at 22,292. Right here. So suppose price opens up here at 22,292. Let me get my screen back. Here. So 22,292. This is where we open, let's say, on Monday. How will price move from 22,292 to 22,300? Anyone? Let's make this interactive. So I know I'm coming across clear. How will price move from 22,292 to say 22,300? Anyone? No? Y'all are lost? No, I'm not. Yeah, zigzag. It's not gonna go up in a straight line. I know. Yeah. So the answer I'm looking for is this. Aggressive buy side orders. So keep these things coming in. I like buyers coming in. Yeah. So buyers coming in. It can come in a gap up also. Gap up will happen only when there is previous demand in the market. A lot of buy orders coming in are gonna push price up. So we understand over here very, very clearly that only when there is more demand, price is gonna move up, right? And when there is more supply, price is gonna go up. Now, what moves price? Second question. What do you think moves price? What do you think moves price? So suppose the market closed here, right, on Friday. 22,207 was the low, and it did not go lower because the exchange closed, right? So 22,207, 208, this is where it closed, and we agree that demand or aggressive buy orders are going to push it up. But if there are no aggressive demand orders in the market, will price move? If there are no aggressive demand prices in the market, will price move? No. The truth of order flow trading is, if there is an order at 22,207, which is a limit order, and I'll repeat that again, if there is an order at 22,207.95, which is a limit order, and let's say he's a buyer, and there is another order at 22,208, 7.95, 0.05 paise higher, and he's a seller, and if both of them are limit orders, price will never move. Price will never move. Price only moves when there is an activity, an initiative activity made by either one of them to meet up with the other. If you put limit orders in the market for an option at 110 and price is at 100, will your order get executed as a limit order? Never. Never. It will never ever happen that your limit get order at a higher or a lower price than where the market is trading gets ever executed, because the market is not going at that level, right? And the same thing can be said about limit orders. Limit orders do not move exchanges, do not move prices. So what moves prices? Initiative activity or an aggressive market order, right? And whenever there is an aggressive market order, it can meet a limit order seller or a buyer and move price to that particular zone, right? And without the function of a market order or an initiative buyer or an initiative seller, now mark my words, why I'm using this, and I'll come to you in a bit about why I'm using these words. Without the presence of an aggressive market order or an initiative buyer or an initiative seller, the market will never move. The market will never move. Limit orders do not move markets. So now we are understanding order flow as a role play between two kinds of players. One are called limit traders, and the second one are called aggressive traders or market orders. And whenever you put a market order on the exchange, do you get an immediate fill? Yes. Market order means you want to purchase that flight ticket right now and you want to fly, right? Limit order means you're planning a vacation 15 days from today, 20 days from today, and you'll have to wait till that date to go to the airport to catch your flight. But market order means you want to be onboarded right now, right here, and you want to participate in the moment of the market now. And market order means your option is going to get filled right there then, and it is going to take the best of limit orders and best of limit sell orders and get you back over there. So every time an aggressive market player comes in and fills an order, and if he's a seller, he will come on the left side, and an aggressive market order comes and fills orders. If he's a buyer, he will come on the right side. There are no two ways about it. And if he's a limit order buyer or a limit order seller and he's waiting over there, he will never be part of an order flow chart because his order is not filled. Am I clear? Right? So what we are seeing over here is the presence of initiative activity on the left-hand side dominated by sellers because they force price to move through their aggressive intent. And what we are seeing on the right side is aggressive buying activity from people who decided to go market and get their fills in. If these were limit traders, their orders would never be filled. I'm actually clarifying this because somebody mentioned to me that this is not correct. Well, my understanding of order flow is about 15 years old, and if this is not correct, then I do not know what actually is correct, right? But I want all of you to understand that aggressive market orders move markets, and we have to be on the lookout for aggressive market orders, which is why we have them depicted in our charts through something called an IB or an IS signal, initiative buyers and initiative sellers, and you will see them on your charts as those ones in greens and reds, and they are not initiative activity at one price, they are initiative market orders at various prices in the market. And the crux of order flow trading is understanding where market orders are and understanding where limit orders are. And if you're a participant in a market which has got a stream of market orders coming in, the market is going to move faster. And if there are no market orders coming in, then the market is going to be quiet and dead. Like in this particular example, there isn't a lot of activity in the Nifty futures in terms of market behavior on Friday, which was yesterday. So you can say that it was in a range of about 75 to 100 points all day, because there were no initiative traders in the market that day, right? But you can see something else in the Nifty, and let me come back. Let me come back and show you some examples of what the initiative activity can do and what the initiative selling activity can do. So this is an example of an initiative sell activity. So there were a lot more sellers in this particular candle at 22,178. So that's why it's depicted as pink, and they moved the market really quick. So this is what, 22,178 to 22,040. So in about 30 minutes, the market is moved about 30 points. Why? Because there was a lot more initiative activity. And you contrast that to something like Friday, the market is barely moved at all day, right? So 22,324 was the high, 22,207. It's about a 130 point range in about 6.5 hours of trading, 7 hours of trading. Sorry, not 7 hours, 6.5 hours of trading, 375 minutes. So what that one IS candle did in 30 minutes, the entire market has done in about one full day of trading. Only reason being because there weren't enough initiative traders in the market. So you're seeing the power of market orders, and whenever there are market orders, the market is going to move correspondingly more faster, right? So there are a number of elements about how we construct an order flow chart. If you really go to the second level of understanding order flow, you will see that there are these various elements in understanding an order flow chart. Now we've had to add all these things to you because demand and supply, by its very nature, it's a very complex understanding of markets. The reason being that in the markets, everybody trades a different time frame, right? The simplest thing would have been that everybody decides to trade for the next 5 minutes. Everybody decides to trade for the next 5 minutes, and in those next 5 minutes, everybody can either be a buyer or a seller, and those 5 minutes are the only thing which is there in the market. No trader trading a stock for 5 years, no institutional buying that thing for the next 1 year, 6 months, 3 months. Traders all are gone. If demand and supply was to be put together for only a 5-minute window, 99% of us would have been making winning trades every single day. But the complexity comes in because a lot of time frames are involved. So if I'm buying the Nifty future tomorrow at 22,207, there's somebody who's bought it at 20,000 2 years back or 6 months back, and now wants to book profits. So because of that complexity, a lot of things have to be added, and rules and strategies need to be formed, which is why we have something called IB plus IP signals, IS plus IS signals, then an understanding about COT. And it's a lot of work. And I'll be the first person to tell you that order flow is a lot of work. But it's meant for people who are willing to push and do that kind of extra work. The easiest thing to do is look for something called a holy grail, buy and sell signals, throw your capital at it, end up losing it, and get knocked out of the market and join the 90% of traders who are failing the markets every single day. That's the easiest thing to do. I'll give you an even more easier way. Withdraw all the capital from the market do not trade. You'll require that capital. Because if you're not willing to work hard, if you're not willing, okay, to get the knowledge of trading these markets, okay, it's not going to be easy for you at all. So what you have to understand, and I talk to a lot of institutional desks every day. I talk to all these financial wizards, okay, who are in the market, okay, for years. And all these firms have got managers at the top, okay, who are in the markets for about 15, 20 years at one stretch. The head of a derivatives firm, okay, has been in the market for 35 years. And if you look at all the big names, okay, you know, you are competing with not just their big money, you're competing, okay, with people, okay, who are 15, 20 years, okay, you're senior in these markets. And do you think, okay, they trade randomly on a chart? You have to be good. You have to either match them skill-wise, knowledge-wise, capital-wise, okay, to be in a position, okay, to make profits from the market. So yes, okay, there is a lot of work involved. And if you're willing to do the work, the order flow chart is going to even out the curve for you, because, okay, now you know, okay, what your institution is doing. And now you know whether you can go and work, okay, these markets, okay, in a similar way, right? So this is, okay, what basically, okay, I wanted to talk to you, okay, about what the order flow is. There are a number of ways, okay, which you can apply the order flow to the regular way in which you can trade. There are a number of methods, okay, for you to do that. And one of the things, okay, you can do is go up, okay, to this user manual. So this is there, okay, on the top right. And we have a lot of order flow intro videos right here. Right, and you can, okay, go through all of these over here and have a very good understanding about what it means, okay, to trade, okay, with the order flow. You can also go, okay, to the YouTube channel. So search for VTrender over here. I'm not signed in. So here you will get a lot of playlists, and you can, okay, have a very good understanding about what the order flow is all about. As a master class over here, you can get to see, okay, what the order flow can do. Okay, in fact, okay, you can go through all of this. Wow. So that is what you can do. You can also, okay, go to our home page. You can go to our home page, and there is on the home page learning video section where you can understand, okay, what the market profile is all about. So our learning videos are right here. These are all free, complimentary. You can go, okay, through the must-read articles and gain a grounding on what this is all about, right? And if you want to really, okay, explore this in depth, we have a eco section. Which will take you, okay, through about 15 videos, okay, of understanding, okay, what to do, okay, in the markets, right? So the chart section is right here. And if you want to delve deeper into what to do, okay, with the order flow, we have, okay, market profile and our order flow eCro subscription at about 5,000 plus GST, which is 5899, including 8-day access to these order flow charts, okay, which you have. So it's not just, okay, the learning, okay, you can get an 8-day immediate access for a one-time cost, lifetime access of these, where there are order flow trading strategies for you, okay, to get good at understanding these markets at all. This is a very good thing, okay, which we started for traders who wanted to get good in the markets. So it's not just those 12 videos on market profile and order flow, and everything about order flow is there from the ground up. You can understand what is the role of buyers and sellers, and you can understand, okay, what is the role of initiative traders in the market, in that ecos. But not only that, okay, if you're trading these markets live, you're watching those videos, you get this 8-day access to the entire order flow package, the index order flow package, the options also, and you can see those concepts coming alive to you as you go through that ecos as well. So this is a DIY program which you can do by yourself. The other thing is you can come to the WeTrender mentoring room, which is where we get together every day in the morning, and this has live hand holding. So this will give you these same charts, order flow, market profile, but we'll walk you through how you can utilize these charts in live market hours also, right? So there is a lot of depth to what we have to say about order flow, and it's best that you take this as a long-term journey. If you are looking to make money for the next 1 day or next 2 days, or thinking about trading the markets as something as a short-term venture, it's not going to end up well for you, right? Because there are other seasoned professionals in the market who have a much more professional understanding of the markets. I know some of you who are listening to me right now are running your own co-location desks, etc. So that's the kind of money which is involved, and that's how the seriousness which is there in the markets at all times, right? So depends on how you go through all of that. You will have a lot of questions about how this is, and not everything can be explained 100%, but we have a good support forum, and we can explain everything to the best of our knowledge, provided you have an open mind to what is about to unfold, right? So I always keep saying this: experience is the biggest teacher, right? And you do not argue with people who have got experience. And when a person with experience speaks, it's best not to close that mind down like a parachute. No, it functions only when it is open up, be ready to explore, because there's an entire new world of trading on the other side, right? Now I do not know how some of you are trading today, but this I definitely know. My life changed the day I started trading with an order flow chart, and it evened out that platform for me. From being a price-based trader, I understood the role of volume, I understood the role of demand and supply, and I understood how demand moved prices, and I understood how supply moved prices. And for you to get that, you will have to make that shift. You'll have to move from a price-based focus of the markets to something bigger. Like I said, it's not just Bhao who is the Bhagwan, it's volume, it's time also. And when you understand that there is a role play between three: price, volume, and time, you have a better chance of getting good in this understanding of markets, right? So I hope this has been helpful, and it can ignite a bit about what you really need to do in the markets for yourselves. The journey belongs to people who are driven. The journey belongs to people who have the passion, who want to grow, who are fed up of losses, right? I got up in the morning at 3 a.m. to study order flow because I was fed up of my losses. I could not see those losses happening. Every single day I used to trade back then. Some trade used to go wrong, and I decided that this is enough, that I need to change, that I need to find a method to stop that flow of losses. And I went to work on it. It did not happen automatically, but I found a way, and it worked for me. And if you're not that serious about how you understand markets, or if you're okay to make losses every single day, then maybe this is not for you, right? But if you are the person who's really determined that this is the way and this has to end, and other people are making money, and big financial institutions they don't make those kind of losses, only retail traders make those losses. And if you're willing to find those answers, you'll have to change your approach. You'll have to incorporate new things. You'll have to involve new methods in your understanding of the markets. And if you can do that, there's a new universe which is waiting for you. And I want all of you to be part of that universe, part of that journey towards making yourselves a profitable trader, right? So that's what I wanted to share. There is a lot more we can do about the order flow. I can talk to you a lot more about advanced order flow concepts also. But today's session was a groundwork on why you need to incorporate an order flow chart in your analysis. I'll take one final round of questions if you have. general questions, and happy to take one final round, and then we'll wind up for the day. So COT is just one of the factors we look at when you're looking at order flow. So when you're looking at order flow, if you go back through this chart, it's a sum of 6 things. So there is liquidity of the markets, there is COT, there is dynamics through RB, IB, RS, and IS, there is volume clusters, and there is imbalances. I'll be the last person to tell you that all this is easy. There's a lot of work involved, and don't try to be simplistic about the markets. That एक strategy है, एक strategy से काम करना है, and this is the only thing which is gonna work at all times. The markets are not simple. They are a complex ecosystem of thoughts, feelings, behaviors, experiences, and of course lots and lots of money, right? So every day the market is different. Don't try to think that every single day one strategy is going to work, right? So it's a mixed thing, but this is a good start for you. Market liquidity works in order flow, COT works, RB, IB, RS, and IS, volume clusters, and imbalances. So when I say COT, COT is the difference between demand and supply in that particular bar. So the best way to use COT, just point out something else over here. So when I'm looking at COT, I'm looking at the number of the demand and supply below the bar. But when a lot of new traders, this is a mistake a lot of novice traders do, they look at COT of one particular bar. They look at COT of one particular bar and say, this is it. The market is not driven by only one 3-minute window. The market is not driven by only one 3-minute bar. The market is a sum total of a lot of traders of different time frames coming together and making the market. So if you are just saying that based on this 1134 COT, the market is now a sell, it does not work that way. It's a sum of a number of things which come together. So for me, COT has always been about a minimum of 30 minutes. So I look at the last 30 minutes of the day and then say, this now market is got about it. So in this last 30 minutes, we came down from this level. So all this on Monday was not driven by a lot of demand. So this would tell me that the market did not have a lot of demand coming up over there. So in a 3-minute window, you don't look at only the last 3 minutes. You look at a sum total of about 30-60 minutes and then try to make an understanding about where it can be done. So I answered this question. It works on all exchanges. It works on all instruments. It works across commodities. So simply put, wherever you see an exchange and an exchange is taking orders, those orders will show up in an order flow chart. So order flow works across continents, across countries, across exchanges. I cannot say it even better. And how much background work is needed before taking up the course with you? Lots and lots of background work. You need to be serious about your commitment of markets. The people who trade order flow are generally the professional traders. They look at order flow and all these kind of things. So the institutional desk is already aware of what is the demand and the supply in the market, and they don't take a position in the market randomly without taking into account what is already happening in the market, right? So for us, as newbie traders to the market, we take a different approach. We enter and then we think. That's not the right way of approaching markets. The professional trader, he's got his strategy planned out. He's got his work taken out, and he does not trade randomly all over the chart. So do your background work, get to know what this is and make this as a beginning. And I'm not saying that in 1 month you're going to be the best order flow trader there is. It's a work in progress, and if you continue doing the work, it will keep growing. I'm still learning from the markets. I don't know everything about the markets, and I've been around for 15 years. right? And every day, okay, I learn new things from people like you and me. Okay, there is a lot of humbleness, okay, which comes when it talks about trading the markets. Okay, you cannot, okay, show off and say that you know everything. The market will humble you the very next day, right? So it's a journey, it's a learning process, and we have to keep learning every single day. So in a small 3-minute window, how do you approach IB and IS? So an IB, remember, is an initiative buyer. It's a set of market orders come together in a 3-minute window. Ideally, if you've gone through that e-course and the VMR program, you already know that we are looking for an IB plus IB pattern. So that is a set of two IBs coming together within that rule of 10, which is those 10 bars. So when that happens, you know, okay, the market has got a lot more initiative traders in that half an hour window. So when that happens, the IB plus IB, okay, is for you, okay, for to tell you that the market wants to go up, and you keep your stop loss at the low of the first IB bar. The opposite, okay, you can do for an IS. But when there is one IB and the second IB, okay, does not come in the next 30 minutes, now you know, okay, that there isn't a lot of initiative buyers in the market. Right. So I think, okay, I've gotten okay, all of your questions. Okay, there would be, okay, some more questions, okay, which you may have, which I may not have, okay, gone through, but I'm confident, okay, that most of your questions, okay, I have answered. For the few questions, okay, I have not answered, okay, please mark them as an email to either charts@vtrender.com or support@vtrender.com. We would be happy, okay, to have these questions, okay, from you and answer them to you. My Twitter is open, as are my DMs, okay, on Twitter. You can reach me anytime on Twitter. I'm happy, okay, to share, okay, what I know about the markets, and I wish you the best. Okay, this is a long, arduous journey, and it's a journey, okay, which is tough. Okay, life of a trader is never easy, but it gets easier with the passage of time. Okay, from struggling to find trades, you will become a master of the market if you can just give it a little bit of time and puts in lots and lots of effort. The best part is, and this I can tell you confidently, that the journey becomes easier with time. Okay, you are month 1 in markets, it's very tough. Year 1 in markets gets little bit easier. Year 5, much easier. Year 10, you are a pro. Okay, so if you have that kind of a vision, you will get it. Right? So I'll sign off, okay, for now. And I thank you for all coming in on a Saturday and listening, okay, to what we had to say about order flow. One of these days, I'll post on Twitter. We'll do a live order flow class in market hours, and I'd like to show you, okay, how these orders, okay, work real time as the market moves. So till then, all the best. Have a pleasant Saturday. Enjoy your weekend, and my best wishes to you for the week ahead in trading. Thank you for listening in.